Okay, so let's jump into this deep dive.
Yeah, let's do it.
We're looking at the Bank of Maharashtra Q3 2024 results.
Sounds good.
And you've given me like the whole shebang.
Yeah.
We've got the financial results, we got the investor presentation, and even the auditor's reports.
Yeah, absolutely. I think that's what we need to get a
Yeah.
good picture of how they're doing.
Yeah. So it seems like you're really trying to get a handle on where this bank stands.
Definitely.
So
Yeah.
before we get lost in, the balance sheet, all the numbers,
Sure.
the investor presentation starts out with kind of a snapshot of India's macroeconomic environment in late 2024,
Okay.
kind of setting the stage for our main act.
Yeah.
And it seems like it's kind of a good news, bad news situation.
Yeah, I think so. Like, on the one hand, you've got pretty strong GDP growth projected for the year. Industrial production is up and inflation seems under control.
Yeah.
So, all good things for a bank looking to lend and grow.
But there's always a but.
Exactly. The presentation highlights geopolitical tensions, which are always a wild card, and potential struggles for banks to attract deposits.
Oh, interesting.
Yeah.
Okay, so mixed bag for the backdrop.
Yeah.
So let's get to the star of the show, the bank itself.
Okay.
So the unaudited financial results, both standalone and consolidated, show that profit is up.
Yeah, a lot.
A lot, yeah.
Yeah, standalone net profit for Q3 2024 was 140.65 crore. That's a 35.82% jump year over year.
Wow.
And for the first 9 months of the year, it's even higher, a 41.92% increase.
Wow.
And the consolidated results, which include their subsidiaries, are very similar, just slightly more profitable overall.
Okay, so profits are soaring, which is usually what investors want to hear.
Yeah, absolutely.
But what I thought was really interesting was how much their operating expenses have jumped as well.
Yeah.
17.32% year over year for the 9 months. Is this a case of you have to spend money to make money, or should we be a little worried about that?
Yeah, that's a good question. I think part of it is likely just due to them investing in their workforce. Their staff costs are up almost 26%.
Okay.
Which could be a good sign if they're attracting good people and expanding, but it's definitely something to keep an eye on.
Okay.
Especially because we talked about how attracting deposits could be a challenge.
Right.
They really need to make sure that that spending is turning into efficient growth.
Yeah, makes sense.
Yeah.
All right, so let's break down some of the components of their financials.
Okay.
So interest income, which is basically what they earn from loans, is up significantly, about 21% for the 9 months, mainly driven by similar increases in advances.
Right.
But they're not just relying on loans, right?
No, their non-interest income, which comes from things like fees and commissions, is also up 25% for the 9 months.
Okay.
So, that's good. They're not putting all their eggs in one basket, which is a good sign of a resilient business.
Yeah, diversification is good.
Exactly.
Yeah.
But speaking of eggs in baskets, we've got to talk about their provisions for non-performing assets, NPAs.
Yes, the dreaded NPAs.
Yeah.
For those who aren't, super familiar with banking jargon,
Sure.
can you give us a really quick, ELI5 on NPAs and why they matter so much?
Yeah, so basically when a bank lends money, they expect to be repaid with interest, right? An NPA is a loan where the borrower isn't paying back as agreed. Too many of those can really hurt a bank's profitability and even, threaten their stability.
Got it. So how's Bank of Maharashtra doing on that front?
So their standalone results show they've set aside about 84.07 crore for NPAs in Q3 alone.
Okay.
And 261.33 crore for the 9 months.
Okay.
Which is actually slightly lower than the same time last year.
Oh, cool.
So that could mean that their asset quality is improving, but we'll dig into that a little bit more later.
Yeah, okay, so they're setting aside money to cover potential losses from these bad loans.
Right.
Now let's talk about some of those key ratios that you financial wizards love to analyze.
Okay.
So the investor presentation mentions net interest margin, or NM, return on assets, ROA,
Yep.
return on equity, ROE.
Uh-huh.
Can you just give us the quick and dirty on what these tell us about a bank and how Bank of Maharashtra is doing?
Yeah, so those ratios are basically just different ways to measure how efficient and profitable a bank is. NM tells you how much profit they're making from interest alone for every rupee that they lend out. So a higher NM generally means that they're managing their interest income and expenses well.
Okay.
And Bank of Maharashtra's standalone NAM for Q3 2024 is 3.98%.
Okay.
Which is actually pretty good. It's up from both the previous quarter and the same quarter last year.
Oh, wow.
So that's a good trend.
Okay, so they're making decent profit on their lending activities.
Yeah.
What about ROA and ROE?
So ROA measures how much profit they generate for every rupee of assets.
Okay.
So think of it as their overall efficiency in using their resources. Their standalone ROA for Q3 is 1.78%, which is a solid improvement from 1.55% in the same quarter last year.
Mm-hmm.
And then ROE tells you how effectively they're using shareholders' money to generate profits. A higher ROE is generally better for investors, and Bank of Maharashtra's ROE for the 9 months is a whopping 22.36%.
Wow. That sounds pretty impressive.
It is.
Does that mean that they're a sure bet for investors?
Well, not so fast.
Okay.
While those ratios are looking pretty good, we need to look at the whole picture. There's this other crucial ratio called the provision coverage ratio, or PCR.
Okay.
And this basically tells you how much of their potential losses from bad loans are covered by the provisions that they've set aside. A PCR close to 100% is generally considered healthy, and the Bank of Maharashtra is at 98.28%.
Oh, wow. So they seem to be well prepared to handle potential losses from bad loans.
Yeah, it seems so.
But, numbers only tell part of the story.
Right.
So let's move beyond the spreadsheets a little bit and look at what the investor presentation reveals about their overall business strategy.
Sounds good.
What jumps out at me is their focus on loan growth. Total advances are up by over 21% year over year,
Yeah.
particularly in retail, agriculture, and the MSME sectors. So micro, small, and medium enterprises. So it seems like they're not just chasing the big corporate clients anymore.
Right.
Why the focus on these particular sectors?
It could be a way to diversify their loan portfolio and tap into areas that have high growth potential, spread out their risk a little bit. Retail lending especially is usually seen as less risky than lending to big companies.
Okay.
But it also means that they need to attract a lot more individual borrowers to reach their targets.
Which brings us back to that challenge of deposit mobilization we talked about earlier.
Exactly.
If they're lending more, they need more deposits to fund those loans.
Yep.
And the investor presentation shows their CASA ratio is actually down.
Yeah, from 52.73% in March 2024 to 49.28% in December.
Can you remind us quickly what that ratio means?
Yeah, so CSA is the proportion of their deposits that come from low-cost sources like current accounts and savings accounts.
Okay.
So lower CASA ratio means that they might have to rely more on those expensive borrowings to make up the difference, which could impact their profitability down the line.
Got it. So it seems like they're walking this tightrope between, growth and managing their funding costs.
Right.
What about their investment strategy? Are they playing it safe, or are they taking on more risk?
Well, the investor presentation emphasizes their commitment to a balanced investment portfolio,
Okay.
favoring what they call safe and liquid assets. Their total investments are up over 20% year over year, and the auditor's reports seem to back up their claims about sticking to RBI guidelines for classifying and valuing these investments.
Okay, that sounds reassuring. But the auditors also point out that the bank has this significant COVID-19 related contingency provision of 1,200 crore.
Yeah.
Is that a sign that they're still a little bit worried about, lingering effects from the pandemic?
It could be. It's a reminder that the recovery isn't completely uniform. There could still be some risks out there.
Okay.
It's interesting, though, that the auditors also highlight a positive thing. A new RBI master direction has actually resulted in 120.22 crore accretion to their general reserve. So a bit of give and take in the world of investments.
Yeah, that makes sense.
Yeah.
Okay, so we've got a sense of, the overall financial picture, their loan growth strategy, and their approach to investments.
Right.
But let's get back to those MPAs for a second.
Okay.
Because those provisions we talked about earlier are only one side of the story.
Yeah, definitely.
What do the actual MPA ratios look like?
So the standalone gross NPA ratio, which is basically the percentage of their total loans that are non-performing, is down to 1.80%.
Okay.
From 2.04% in the same quarter last year. So that's a positive sign that they're doing a good job managing their asset quality.
Yeah.
And even better, the net NPA ratio, which factors in the provisions they've set aside, is down to a tiny 0.20%.
Wow.
Yeah.
So on the surface, it looks like they're doing a decent job of keeping those bad loans under control.
Right.
But the investor presentation breaks down the NPAs by sector.
Yeah.
And there's some pretty stark differences. For example, the NPA percentage for agriculture is 7.85%,
Right.
while retail and MSME loans are much lower at 0.34% and 2.39% respectively.
Yeah.
So why such a huge gap?
That's a great question. And it really highlights just the inherent risks in agricultural lending. Farmers are often at the mercy of unpredictable weather conditions, fluctuating crop prices, and they have kind of limited access to formal credit.
Hmm.
All these things can make it difficult for them to repay their loans on time, even if they're doing everything right.
Yeah, that makes sense.
Yeah.
So how's Bank of Maharashtra tackling this challenge? Are they simply writing off those loans, or are they actually trying to help these farmers get back on their feet?
So both the investor presentation and the auditor's reports give us a little insight into their efforts. They have what they call a recovery and upgrade strategy,
Okay.
which involves working with the borrowers to restructure loans, provide additional support, and facilitate recovering those outstanding dues. They're also transferring some of the loans to asset reconstruction companies, or ARCs.
So basically getting those bad loans off their books.
Exactly. That lets them focus on their core business and potentially recover some value from those assets.
Gotcha.
The auditor's report mentions that during Q3 2024 alone, they transferred NPAs worth almost 140 crore to ARCs.
Wow.
Yeah, so it seems like they're taking some pretty active steps to clean up their balance sheet.
Okay, so they're growing their loan portfolio, especially in those retail, agriculture, and MSME sectors, while also trying to keep those NPAs under control.
Right.
But can they afford to do all this?
Yeah.
How's their financial strength looking?
So that's where capital adequacy comes in. Think of it as a bank's cushion to absorb potential losses.
Okay.
The higher their capital adequacy ratios, the stronger their financial foundation. And Bank of Maharashtra boasts a capital adequacy ratio, or CRR, of 18.71%,
Okay.
which is well above the regulatory requirement.
So they've got a strong safety net.
Yeah, it seems so.
What are the key components of this CRR, and how are they doing on those?
Okay, so CRR includes something called CET1 additional Tier 1 and Tier 2 capital. CET1, or Common Equity Tier 1, is kind of the core high-quality capital that represents a bank's strength. And Bank of Maharashtra's CET1 ratio has actually increased to 13.60%, which is a positive sign.
Okay.
Then you have additional Tier 1 and Tier 2 capital, which kind of act as extra layers of protection, allowing them to absorb losses even if that CET1 capital gets depleted.
Got it. So what's driving their strong capital position?
So they actually did something pretty interesting. They recently raised a significant amount of capital through a qualified institutional placement, or QIP,
Okay.
and they pulled in a whopping 3,500 crore in October 2024,
Wow.
which gave their capital base a big boost.
That's a bold move.
Well,
Did that equity raise change the government's shareholding in the bank at all?
it did. After that QIP, the government's stake decreased to 79.60%,
Okay.
down from 86.46% in December 2023.
That's interesting. Could this be a sign that the government is kind of gradually giving public sector banks more freedom to operate?
It could be. It's a trend we've seen with some other banks as well. More autonomy might allow them to operate more like private sector banks,
Right.
potentially leading to more agility and efficiency.
Okay, so they're financially solid. They're growing their loan portfolio strategically and even doing a little bit of fundraising. But what about the elephant in the room?
Okay.
The digital revolution that's sweeping through the entire banking industry.
Yeah.
Is the Bank of Maharashtra, keeping up with the times?
Well, they're certainly trying. The investor presentation is full of descriptions of their digital initiatives,
Okay.
like mobile and internet banking enhancements, new loan products, with what they call simplified digital journeys, and they're even using AI-based solutions.
They're even on WhatsApp.
Yeah, exactly.
Do people actually do their banking on WhatsApp?
Apparently so.
Yeah.
It's all about, meeting the customers where they are,
Yeah.
making banking as easy and seamless as possible. And the numbers seem to suggest that their efforts are working. They've seen a big jump in digital transactions and the number of users for their mobile banking UPI, and that WhatsApp banking is growing fast.
For example, they went from 1.32 million mobile banking users in June 2024 to 1.79 million in December.
Wow.
That's over 35% growth in just 6 months.
Yeah, that's a lot.
Seems like they're attracting a new generation of tech-savvy customers.
Absolutely. And this digital push also kind of aligns with their financial inclusion efforts.
Right.
They've seen a steady increase in PMJDY accounts, which are those accounts designed for people who weren't previously part of the formal banking system.
Got it.
So it's all kind of connected.
Yeah, they're also promoting government schemes like the Pradhan Mantri Jivan Jyoti Bima Yojana and the Pradhan Mantri Suraksha Bima Yojana through those digital channels. So it's great that they're using technology to make these services more accessible.
Yeah, absolutely. It's a win-win. It helps them expand their customer base, and it empowers more people to participate in the financial system.
Okay, so they're ticking a lot of boxes here. Strong financials, strategic loan growth, robust capital adequacy, and a pretty solid digital push.
Yeah.
But before we get too carried away with all the good news, the auditors do highlight a couple of potential red flags.
Oh, okay.
They mentioned the lack of independent directors on the bank's board
Mm-hmm.
and the continued COVID-19 related contingency provision.
Yeah, those are definitely things to pay attention to. Independent directors bring, diverse perspectives and experience to the boardroom.
Yeah.
So their absence really raises questions about, the bank's corporate governance practices.
And that continued COVID provision suggests that, maybe they're not completely out of the woods yet.
Right. It's a reminder that even as the economy recovers, there are still some uncertainties out there.
Yeah, that makes sense. Okay, so we've covered their financial performance, their strategic initiatives, and that broader economic context.
Mm-hmm.
What does this all mean for someone like you who's clearly digging deep into Bank of Maharashtra?
Well, I think it's not a simple black and white picture. They're showing strong growth and making some bold moves, but they're also facing these challenges with deposit mobilization and managing those NPAs, especially in agriculture.
All right.
And while their digital push is promising, so is the rise of all these fintech competitors out there.
Yeah.
So, it's a bit of a mixed bag.
It's not a clear-cut buy or sell decision then.
Exactly. I think this deep dive is about giving you the knowledge and the insights to make informed decisions based on your own circumstances and risk tolerance.
But here's a final provocative thought for you to ponder as we continue our exploration.
Okay.
Are they actually leading the charge in this evolving Indian banking landscape, or are they just playing catch-up?
That's the million-dollar question.
It is.
To answer it, we need to look beyond these reports and look at the bigger picture. The rise of fintech, the changing regulatory environment, and even evolving customer expectations.
And perhaps most importantly, how Bank of Maharashtra is positioning itself to navigate all these uncharted waters.
Exactly. Stay tuned as we delve deeper into the strategic choices that will determine their success in the coming years. As we've been going through all these numbers and strategies, I keep coming back to this one question.
Yes.
Is Bank of Maharashtra really innovating and shaping the future of banking, or are they just kind of trying to keep up with everyone else?
Yeah, that's a great question. It's easy to get lost in the details and kind of lose the forest for the trees.
Exactly.
We've seen their impressive profit growth, this shift towards retail and MSME lending, and they're obviously investing in digital technology.
Yeah.
But are they really pushing boundaries or just reacting to all the changes happening around them?
Right. I think to answer that, we need to look beyond just their financials and consider things like their corporate culture, their leadership, and their ability to attract and keep good people. Because at the end of the day, a bank is only as good as the people running it.
Yeah, that's true. The investor presentation does mention their workforce.
Yeah.
Over 14,500 employees, with 70% of them under 40. That's a pretty young team compared to some of the older, more established banks.
It is. And that suggests that they're attracting younger talent.
Yeah.
Which is really important for any organization that wants to, adapt to a changing world.
Yeah.
They're also investing in training for those employees. Over 20,000 hours of training provided in the last quarter alone.
Okay.
So that's a good sign that they're committed to developing their people and, keeping them engaged.
Yeah, but, going back to what auditors flagged about the lack of independent directors on the board,
Right.
that does raise some concerns about their governance structure and whether they've got the right mix of, experience and perspectives at the top.
Definitely. Independent directors are so important for, making sure there's effective oversight and challenging the status quo.
Yeah.
Their absence could mean that there's not a lot of diversity in thought and that there could be some blind spots when it comes to assessing risks and making big decisions.
Yeah, it's like they're building this high-performance engine, but haven't quite figured out the steering wheel.
Yeah, that's a good analogy.
Yeah.
And it highlights that you can't just focus on the numbers.
Right.
You also have to think about the human element and the quality of leadership.
Exactly. Speaking of looking beyond just the numbers,
Sure.
let's talk about their commitment to sustainability.
Okay.
Their ESG initiatives, particularly in green finance, seem to be a big part of their story.
Yeah, absolutely. It's great to see banks really taking a proactive approach to sustainability. They've got those dedicated loan schemes for green buildings, electric vehicles, and rooftop solar projects.
Yeah.
And it's not just talk.
Right.
They're actually walking the walk by putting solar panels on their own facilities.
Yeah.
The investor presentation mentions that they've generated over 937,000 units of electricity through solar, saving over 1 crore in costs.
Wow, so they're not just lending money for green projects, they're actually doing it themselves.
Exactly. And they're not stopping there. They're also promoting e-waste management, tree planting efforts, and they even have a decent budget for CSR initiatives.
Okay.
Focus on areas like education, healthcare, community development, and skill development.
It's almost like they're trying to redefine what it means to be a successful bank in the 21st century.
Yeah.
Not just focused on profits, but also on social and environmental impact.
It's a bold vision.
Yeah.
And it'll be interesting to see how they actually measure and report on their progress in these areas.
Yeah.
Because transparency and accountability are really crucial for building trust and demonstrating, the real value of those ESG initiatives.
Yeah. Amidst all this talk of sustainability and, digital innovation, the auditors kind of drop a bit of a bomb.
Oh.
They mentioned 172 reported fraud cases during the 9-month ending December 2024.
Yeah, that sounds a little alarming.
It does. What's going on there?
So let's break it down.
Okay.
The majority of those cases, 110, were actually related to digital payment fraud,
Okay.
where the bank didn't really lose any money.
Okay.
It seems like they have systems in place to catch those attempts.
Okay. That's reassuring.
Mm-hmm.
But what about the remaining cases, which amount to over 245 crore?
Those are definitely a concern. The auditors mentioned that the bank has set aside 100% provisions to cover potential losses from those cases.
Okay.
So they're taking a prudent approach, but it's still a significant number.
Yeah, it makes you wonder what they're doing to prevent that kind of fraud in the future.
Right. The investor presentation is obviously silent on that front.
Yeah.
But I imagine they're probably investing in better security systems, strengthening their internal controls, and trying to educate customers about, potential scams.
Yeah.
It's a constant battle, though.
Especially in the digital age.
Especially in the digital age where fraudsters are always finding new ways to exploit, vulnerabilities.
Yeah, so we've got this bank that seems to be trying to do a lot of things, right? Strong financials, strategic growth, digital innovation, a focus on sustainability, and a commitment to attracting and developing talent.
Right.
But they're also dealing with those challenges like fraud, that lack of independent directors on the board, those lingering uncertainties of the post-pandemic world.
It's a mixed bag, for sure.
It is.
And I think that's what makes their story so fascinating. They're not perfect.
Right.
But I think they represent a lot of the challenges and opportunities facing the entire Indian banking sector.
Yeah. And as they navigate this complex landscape, the key question is still, are they really leading the charge or just trying to keep up?
Right. To answer that, we need to think about the bigger picture.
Yeah.
What are the trends that are shaping the entire industry? How are customer expectations changing?
Right.
And how are regulators responding to things like fintech and other, disruptive forces?
Yeah, these are all questions that go way beyond, the scope of these specific reports. But they're really important for understanding Bank of Maharashtra's place in the grand scheme of things.
It's like zooming out from a close-up shot to that wide-angle view. We need to see the whole landscape to really appreciate their journey.
Exactly. So let's step back a little bit and consider that broader context of the Indian banking sector.
Okay.
What are some of the key trends that are shaping the industry? And how is Bank of Maharashtra responding to these challenges and opportunities?
Well, one of the biggest trends is the rise of those fintech companies. These agile startups that are using technology to offer all these innovative financial products and services,
Right.
often at lower costs and with way more convenience than traditional banks.
They're really shaking things up.
They are. They're challenging the status quo and forcing banks like Bank of Maharashtra to rethink how they do things, to adapt to this digital age.
Yeah, and the bank's investments in digital technology, like their mobile and internet banking platforms, are a direct response to that pressure.
Exactly. They're trying to keep up with that fintech revolution and offer their customers a smooth digital experience.
But it's not just about technology, right?
No, definitely not.
Fintech companies are also changing what customers expect.
Right. People are used to instant gratification, personalized services, and a user-friendly interface.
Exactly. And that puts pressure on banks to, improve their customer service, simplify their processes, and be more responsive to feedback.
Right.
It seems like Bank of Maharashtra is trying to do that.
Yeah.
Streamlining those loan applications, introducing new digital products. But are they doing enough to really differentiate themselves from all the competition out there?
That's the question. You know, they're doing a lot of the same things as other banks.
Right?
Investing in digital, focusing on customer experience, trying to be more efficient.
Hmm.
But are they really innovating and offering something unique that sets them apart?
And that's where their focus on sustainability could be really important.
Yeah, I think so. It seems like they're not just jumping on the ESG bandwagon.
Right.
They're actually trying to make it part of their core strategy.
Yeah, their commitment to green finance, social initiatives, and ethical practices could really attract a new type of customer, someone who's looking for a bank that aligns with their values.
Absolutely. It's a smart move, especially as more and more consumers become aware of things like climate change and social responsibility.
Right. But it's not just about attracting customers.
No,
Regulators are also pushing banks to adopt more sustainable practices.
exactly. The RBI has been really vocal about the need for banks to include ESG factors in their lending decisions and risk management.
So Bank of Maharashtra's focus on sustainability isn't just a marketing ploy.
Right.
It's a strategic necessity.
Exactly. And it's an area where they could really get ahead of their competitors and become a leader,
Mm-hmm.
a leader in sustainable banking.
Yeah, but sustainability alone isn't going to guarantee their success.
Right.
They still need to figure out those challenges we talked about.
Yeah.
Managing those MPAs, strengthening their governance structure, and dealing with fraud risks in the digital world.
It's all about balance.
Yeah.
They need to manage those risks while also finding opportunities for growth and innovation.
And that's where leadership becomes really crucial.
Absolutely.
They need a strong visionary team at the top
Mm-hmm.
to guide them through all of this.
The decisions their board and senior management make will determine whether they succeed or fail in the long run.
So as we step back and look at the bigger picture, it's clear that Bank of Maharashtra is operating in a very dynamic and challenging environment.
For sure. The rise of fintech, changing customer expectations and regulatory pressures, are really forcing them to adapt and innovate.
And their investments in digital, their focus on sustainability, their efforts to attract and retain good people are all good signs.
Mm-hmm. But they still need to improve their governance, manage those MPAs, and find ways to deal with fraud.
Right. And perhaps most importantly, they need to figure out how to really stand out
Mm-hmm.
in this crowded and competitive market.
The next few years are going to be crucial for them.
They are. Their choices,
Yeah.
their leadership, and their ability to execute their vision will determine if they become a leader or get left behind.
Yeah. As we continue our deep dive, we'll look at these factors in more detail,
Oh, really?
examine their specific strategies, analyze the competition, and really assess their long-term growth prospects.
And we'll also talk more about the human element,
Yeah.
the role of leadership culture and talent in driving their success.
So stay tuned as we uncover the stories behind the numbers and really untangle this complex journey that Bank of Maharashtra is on.
So we've really dug deep into this deep dive.
We have.
From their financials to their strategy, we've seen a lot of different sides of Bank of Maharashtra.
Definitely.
But at the end of the day, what does all this mean for, someone like you who's really interested in understanding this bank?
Yeah, I think that's the important question. It's easy to get kind of lost in all the data and the jargon. So let's kind of zoom out and think about what this all means for someone who might be thinking about investing or even just, using them for their banking needs.
And from everything we've seen, it's not like a super clear-cut picture.
No.
They're financially solid, they're growing,
Yeah.
and they seem to be making those smart moves on digital and sustainability.
Right.
But there are those challenges too, those operating expenses,
Yeah.
the struggle to get those deposits, the whole board of directors thing, and those lingering pandemic worries.
Yeah, and let's not forget about the fraud cases.
Oh, yeah.
Which, while they were mostly contained, are still a reminder that there are risks involved with this big digital shift.
So what's the big takeaway for someone trying to wrap their head around all of this?
I think it's about understanding that balance.
Okay.
Bank of Maharashtra isn't a, set it and forget it kind of investment.
Right.
They're really actively trying to adapt to this changing world, which means there are both opportunities and risks.
Mm-hmm.
The strong financials are definitely attractive, but you have to weigh those challenges carefully.
And as with any financial decision, it all comes back to your individual circumstances.
Exactly.
Your risk tolerance.
Right. What might be a good fit for one person isn't necessarily good for someone else.
Right. This is all about empowering you with information, not telling you what to do.
Yeah, absolutely.
But here's one final thought-provoking question to leave you with.
Okay.
If you were going to place a bet on the future of Indian banking, would Bank of Maharashtra be your top pick?
That's a tough one.
It is.
They've got a lot of good things going for them.
Yeah.
That solid foundation, the younger workforce, their commitment to digital and sustainability, and they're definitely not afraid to make those big moves.
They're bold.
Yeah, they are. But they also have some work to do on that corporate governance side, and maybe even in creating a really unique identity that helps them stand out.
So what you're saying is it's not a slam dunk.
Exactly. Think of it this way. Bank of Maharashtra is like a really talented athlete.
Okay.
They've got the skills, the drive they want to win, but they need the right coach.